Market observations for the Gold Coast in Queensland. Now, I've really been looking forward to taking this deep dive with you. It has been almost a year since we filmed the last Gold Coast deep dive. We did make the prediction that it's probably a few months to wait until our entry point is opened up for us in our last video. Definitely wait until the end in this one to see if that has changed, what we've actually been doing in this market for the last 12 months. Now, as always, I start with a local government area level helicopter view. I look at the overall macro market and the impacts on the Gold Coast area. We'll be diving in then to individual suburbs, individual streets, and how to really, avoid the gotchas. What are those areas of the Gold Coast that we need to stay away from, that we need to avoid at all costs? A lot of investors over the last 30 or 40 years have been burnt very badly by the Gold Coast, and it is an area that has a lot of apartments built off the plan, ruining suburb dynamics overnight for capital growth. So we definitely have to tread lightly. So let's jump in. Now, I love to have this slide first up. Property investment needs to be treated like a science. Okay, that is everything that we do here at Ripe House Advisory. As you'll see, we've left nothing on the table with this deep dive today. It should be enough for you to really digest and understand the Gold Coast market in isolation. But we need to think of property investment like a science. Okay, once we improve and we learn, we adopt new processes and we evolve, we get better. Okay, so look at what we're doing today and relate it back to this formula. We've got demand drivers minus supply equals the overall scope of opportunity. So let's go into that opportunity now for us to begin with. Employment diversity, extremely diverse. As we know, the Gold Coast, very reliant on retail and tourism. But gee, it has grown rapidly in terms of a working class heartland across the Gold Coast. They love to shop. You've got all your Westfields. You've got a lot of money being spent. They work up in Brisbane. They work down and inland. There's a lot of money in the Gold Coast, a lot of interstate travel, a lot of accommodation, food services, but there is a lot being built, so no surprises there with construction. Now, overall with the employment diversity, what is the strongest indicator for me that everything is rosy and this is leading the nation in the top LGAs across the country in terms of economic diversity and overall income health actually? It's the number one employer with all of these things going on in the Gold Coast is still healthcare and social assistance. Now, ask yourself, would you have expected that when we come into this type of deep dive on the Gold Coast for the number one employer to be in healthcare and social services? I definitely wouldn't. I would have thought, well, no, it's tourism, it's retail, it's accommodation. It's where everyone goes for a short holiday in Australia. Well, they are investing heavily in healthcare and social services because it is a backbone of a very strong population growth area. And over the next 30 to 50 years, it's potentially coming and becoming a very large city in and of itself. It's not, as previously considered a satellite of Brisbane. It is a very large city in and of itself. So that's the way to put Gold Coast into context. Income growth, very high. Commute times, very good for this size of population centre. Unemployment health, now this is a delayed data set. We've seen this come down very rapidly since, so no concerns there from an unemployment level, really across the whole country. So apart from some of the regionals at the moment, unemployment's generally pretty rosy. We see a lot of spending here in education, in industrial, and in improvements to retail, hospitality precincts, but also a renewed investment in tourism. And this is sometimes cyclic based on, people's comfort or demand for spending on these things that are not absolutely required when times are tough. There's still been money spent on that throughout the Gold Coast, which is a really good sign. $8,000 per capita, which is around average. Okay, we don't have the big ticket items in the Gold Coast around mining. Comparing it to some of the other areas across the country, it is lower than these, but it's still okay. I would like to see probably more investment in, some big ticket items, but on the flip side, we've got to look at why they are not there. And it might be because it's already been spent. They've already got way ahead in terms of putting this type of infrastructure in place to bring people towards the Gold Coast. And that's probably a reason why we don't have those really big ticket hospitals, trains, infrastructure spends, sports stadiums, etc. It's because they have recently been done in the Gold Coast, and there has been a lot of money being spent in gentrification and uplifting the Gold Coast over the last 10 or so years. So a lot of that stuff is already in place, and now the population just have to come. Okay, so you've got to look at these things from two sides. Look, local services and lifestyle is off the charts for the Gold Coast, as you would expect. And this is one of the strongest factors that we do see for the Gold Coast. Off the charts, really amazing, strong, 6% projected population growth for the next 3 years. Now that was a constant last year. I can remember the 6% figure as well last year. It has continued on the same trajectory. Okay, very, very high in terms of estimated population growth for the next 3 years. Overall, the city of the Gold Coast is in the top 12 percentile of all local government areas across the country. Last year it was 80%, now it's 88%. Okay, very, very good. We're right up there with some of the biggest, heaviest hitters in the country, but there are some suburbs that are really opening up nicely, which we'll go into in a moment. One thing before I do, the last piece of this puzzle, we've got to analyse the supply coming into this market. So we've got really good employment, we've got amazing lifestyle, we've got okay new projects. It could be better, but remember what is lacking, it's because it's already there. So build it and they will come, and they definitely are forecast to come. 6% population growth over the next 3 years is very, very high. And we see current new construction in the pipeline of 3%. So that supply is being met. That demand is being met, and more than met, in terms of new construction. So we have to be very, very careful in the Gold Coast. And this comes back to those investors. My maths teacher in college growing up, he was part of a large buying group. It was really a spruiking company in actual fact, really. And he would sell people off the plan apartments on the Gold Coast. He got rich because he was making a commission on the sale. Okay, but the poor mums and dads who bought these off the plan apartments in the Gold Coast 20 years ago didn't do so well. Okay, so you can be part of the Gold Coast with all the glitz and the glamour and the capital growth that's going on for land, and the whole ship passes you by in the night because you've bought the wrong type of asset in this area. You haven't got the suburb level right. So we do have to remember that we are more than being met by supply. So we have to get the suburb level dynamic right. And we can see some clusters up here. Pimpana, 14% new homes in the construction pipeline. All along the ocean generally has higher supply. That's generally units, but there are some clusters of houses here inland that we need to be careful of. I have zoomed in on those a little bit closer here. So in the north, Pimpana, even places like Ormeo, over here to Jacobs Well, some suburbs here with 7, 8, 9%, up to 10% new homes in the supply pipeline. We definitely need to be considerate of that. You look inland though, and we have under our 2%. Remember, population growth 2% per annum. Simple maths. We just need to be under 2% per annum. You've got some suburbs here right in the middle that have under 2%, under 1% new construction in the pipeline. Right next to these ones that have 10 or 15% new homes in the construction pipeline, under 1%, just under it. In the north here, heading up in towards Logan, we have under 2%, under 1% new homes in the construction pipeline, and even in the south and in the inland south areas, under 2%. So there definitely are a lot of clusters that have that low new construction in the pipeline. Also around Robina, up here into Broad Beach, Mermaid Beach, and inland to Merrimack. These are all suburbs that also have high new supply in the pipeline, but then we only need to move one suburb away in certain cases and they're already built out. Okay, there's really little scope for this new construction to go on. So it's about getting the suburb level dynamic right in the Gold Coast, and it really always has been. So let's then go through. Opportunity is excellent. We've seen that. But we have to pick our spots. If we get the suburb wrong, we could be sitting in a supply wasteland with capital growth wasteland because of the supply. We need to get this right. So let's dive now into a suburb level. Look, if you like this type of analysis, please like, subscribe, hit the bell icon. You'll be the first to know of any of this new research coming through. Let us know what you would like us to talk about. If you wanted to join the conversation in on this video, head over to the High Performance Property Investment Facebook group. And there is a link down in the description below to join. Check out a discovery call with my team, because this is general advice. This is general advice only. If you'd like it related back, or the data and the information related back to your personal circumstances, I am happy to have a member of my team have a chat with you for 15 minutes about what you're trying to do and see if this data is relevant, see if our research is relevant to what you're trying to achieve. So definitely take advantage of that information down in the link below for the discovery call. So with that in mind, let's dive right in. Days on market, stable for the last 12 months, under 30 days. Remember, we're looking at houses here as the red line. It is trending downwards, so we are seeing a tightening in the last few months. Now, I will say, all right, let's just go back one slide. Last year, I said great overall market, potentially give this a few months for it to really heat up and to evolve and to move in. I just wanted to jump across to what we are seeing in the market right now in terms of our Ripe House R score, capital growth score. Now, just so if you don't know, this capital growth score, in the month of June, it generated 3.8% capital growth for the month alone. In the last quarter, till the end of June, so Q4 2023 financial year, 8.1% capital growth for the quarter alone. And for 2022, across the board, 16.2% capital growth, whilst the market went backwards 5.1%. So that was a 21.3% alpha. Okay, these are audited results across many hundreds of purchases. So just so you know, this algorithm, it's running 24/7. It really does guide us. It gets us to this really sharp end of the pencil, right? It focuses our attention on the Gold Coast, but then the human touch really does kick in to find the individual suburbs. Just so we know and put the Gold Coast in context, in the last month, it's really in the top 10 LGAs nationally. It really is firing up nicely. It's giving us a lot of opportunities to find strong property investments that are set for this type of capital growth for the next 12 months. Okay, and that really is a really important thing. There's only 255 suburbs nationally that are currently approved. All right, and that's the algorithm, and then you can see here from the algorithm 1,500 suburbs approved automatically, and then we are filtering that down to 255 based on my personal approval. So that's where the experience kicks in, the human touch. You know, I've been personally property investing now for over 20 years. I've seen multiple market cycles. You know, I haven't just been a fly-by-nighter who's been investing for a couple of years, or even investing for other clients or for my clients, you know, for less than a couple of years. This is coming from experience. You know, we haven't bought in Townsville because of the issues around insurance premiums impacting demand differently across suburbs and really inhibiting growth. We purchased 120 properties in Toowoomba instead of Townsville 3 years ago, and the results have been light and day differently. And that just comes down to the human touch, being able to read between the lines slightly differently. So I'm just putting this, and I'm saying this information, guys, just to put things into context, because we really need to when we're coming back to this data. So excuse me for that little segue. I really did want to put things into context when we do this deeper dive into the area. Gold Coast is a heavy hitter. We're on the right track if we're looking at buying investment properties in the Gold Coast right now. We can't really do much better. And you noticed we're getting earlier into the buying window into the Gold Coast compared to places over in WA as an example. You know, this is 6 to 12 months ahead of those areas. You know, there's still some great buys to be had over in WA, over in Perth, but we're definitely earlier into the buying window into the Gold Coast than a lot of areas over in WA. And we can see in the last few months, days on market has cut dramatically. So we've seen a tightening on the buy side. Let me go back over here to the next. Percentage of immediate sales has spiked. So we can see, after we did this video last year, I said we're a few months away from the buying window really opening, and it did open. This is one of the signals of that, and it's opening again now. So our entry point, there is a tightening on the buy side that generally results in a really strong upswing in property price growth. Remember, the local government area, the long term in this area is very strong. If we're buying in a very tightly held market with a little scope for new supply entering it, this is about a long-term investment, but we want to get our entry point right down to the month. Okay, so this is a very bullish sign. Stock inventory lowering, so there's a tightening in the market here. Okay, overall days of supply is dropping dramatically. Okay, coming down here to 40, 30, 20 days once again, as it was 3 years ago, 2 years ago, as you would expect. So we really are seeing another cycle beginning in the Gold Coast. Asking price has been trending upwards. Sold house price, it did trend upwards very strongly. So this is the sort of growth cycle I'm talking about. It's gone through a 12 to 18 months consolidation period before everyone's realised, oh, I do want to be living on the Gold Coast. I love it. The job's going great. Let's go, honey. Let's buy. Expect with this tightening for this to be another run upwards. If it's going to be 20%, if it's going to be 10%, or if it's going to be 30%, we don't know. But expect this consolidation period here to be much like this one. Vendor discounting. Okay, properties now are selling for what the asking price is. It's break even. Once it starts pumping up this way, which is going to be, this is an effect. It's not a cause. This is not a leading indicator. It's just an observation. Expect this to continue northwards as things really start heating up there. So, that's probably saying that the window's open now. We're not too late. We can get in there and we can get some good negotiation done. Days on rental markets trending upwards. Okay, so there's a release of pressure on the rental side here. Vacancy rates are trending upwards as well. This is the last 6 months. All right, so this is coming back up towards the 3% mark, which is quite high, and yields have just started to drop slightly. So across the board from the rental side of the equation, we're not really seeing a huge amount of health. Now remember, I like to see the rent to buy dynamic being really strong. That means the rental market leading the buy side of the market. And if we look back 3 months ago, the rental market was looking extremely strong. It has come off slightly. Okay, but that might be because we're going through a winter period. It's probably the least, the least active time of the year for interstate migration into the Gold Coast. Expect that type of rental pressure from people moving to the area to be dissipated in the winter months. All right, that's a cyclic event, so expect that sort of. This 3 month period ago is a period I'm really interested in. Vacancy rates are at the long time moving average. So were days on rental market were here as well. They have continued to dissipate, but my understanding of that would be it's coming into the winter months. Expect it to come backwards going into Christmas. So look, in summary, the buy side is amazing. The LGA is very, very strong. I would like to see that confirmed in the rental side of the market. If anything, worst case scenario, it might be a short-lived upswing. 6 to 12 months, 3 to 6 months. But in a best case scenario, the rental side of the market will recover heading into Christmas based on the weather warming up, and then that would be ticking our boxes all the way through, and I would expect, a 2-year really strong bull cycle, really strong positive upswing cycle for the Gold Coast. All right, so we've gone through that. Which suburbs? Let's do a sanity check here. Let's just go into Google Maps. And I'm just going to give you my high-level overview of the lay of the land. I know the Gold Coast really well. We have invested in properties here quite consistently over the years. We've treaded very lightly. We are buying in the area at the moment, but we've got to get the suburb right. There are 80 investment grade suburbs, or 80 suburbs overall in the Gold Coast. Only around 10% of those would be areas that we would even consider. And of those 10%, around 10 or 15% of the streets we would even consider. So overall, in terms of the 500,000 plus population, there's really only around 2,000 dwellings that we would actually consider investment grade in the whole local government area. We've got to get very fussy here. Okay, so overall we've got Brisbane obviously to the north. We've got Logan, which is looking really great as well. As we saw in this northern pocket, very little new supply being built, but we came down here into Ormeo, Pimpana, there's a lot of supply. So when you go to a spruiker, you sit down and they give you a free coffee and they give you a pat on the back and say, well done, for prioritising your own financial future. You've done the hard part, which is coming here. Now sign this document and sign your life away. Your investment property is going to be underwater in the next 5 to 10 years. Would that be something that you would like because the tax deductions are going to be wonderful? That's when they come and they put you into an investment property through Coomera, Pimpana, all of these wonderful places. I talked to a lovely investor a few years ago who bought a property in Hope Island, and 10 years later it was worth less than she paid for it. Okay, so there's definitely some, and that was a house, by the way, definitely some really scary stories through the Gold Coast. While a lot of people have made a lot of money, we purchased properties for clients in Pacific Pines starting with a $400,000 price point, 4-bedroom, 2-bath. After COVID, that's now probably worth $800,000 to $900,000. So almost doubling in 3 years. There's some really strong results that you can generate from the Gold Coast, but you definitely have to be very aware. All right. I did hear a statistic the other day. Right, and quote me on this because I'd love to see if it's sprouted by other experts from here. 80% of contracts in Queensland are not inspected by a conveyancer before the offer is made. Just think about that. So 80% of people in Queensland are buying properties without having their lawyer check the contract first. So that gives you some idea of who is buying properties in the Gold Coast. People who are not protecting their best interests, people who are putting the rug over their eyes and trying to avoid the reality of thinking they have got Gold Coast. It's doing great things. How can we go wrong? Well, I've got story after story of people buying in the Gold Coast and it not growing in value for 10 plus years. Some of these guys who bought units through Main Beach, Surfers Paradise 20 years ago were bankrupted because of it, right? They couldn't afford to hold them. Because of the vacancy rates, because of them underwater, they couldn't sell them. It's stuff that absolute nightmares are made of. Now, I'm not trying to say that to scare you away. We just have to be really very fussy with how we buy on the Gold Coast. Okay, you've got a lot of locals, a lot of people who make their fortunes from taking advantage of people that haven't done their due diligence. So I really need to say that and really can't stress it enough. So we have a lot of supply through here. We have a lot of land in the future that can be rezoned. Really importantly and almost concerningly is a lot of people that live on the Gold Coast work in Brisbane. So all of this is closer to Brisbane than the Gold Coast itself. So it's a nice middle ground, close for mum and dad or mum or dad to commute north to Brisbane, close for the kids to go to school down in the Gold Coast, close, maybe have one parent working either way. They're hedging their bets, so to speak, but that's where a lot of the new supply is coming in. So generally our sort of strategy through the Gold Coast is buy in developed areas. Buy close to the train and the main highway. Buy close to shopping and facilities, Westfields, etc. But buy in suburbs that are very well established. And so when all the new suburbs are built, Maudsley, okay, all the way through to here, the more houses inland, the more these are going to be more tightly held and pushed up in value. So I sort of like to call this, by the way, I guess the Golden Triangle. So you've got Ipswich to the Gold Coast to Brisbane. This is an area where there's a huge amount of population being built over the next 50 years. And just imagine all of this area here with people living, not the dog, but people living all through this hinterland, rural type areas. Imagine that filled with another 1 million or 1.5 million people over the next 30, 40, 50 years. What's that going to do for all of these areas here that are already built out, that are already 10 minutes drive to, all the wonderful things on Main Beach? What's it going to do to all of these areas that are already on the M1, okay, that already have the excellent amenities up to Brisbane and down south or into Gold Coast itself? So just think about things in that way. Also then stay well away of, looking at these suburbs and just applying the common sense logic. You've still got these massive clusters of undeveloped land. They can come in and build thousands of dwellings through here. These areas less likely. They'd have to change zoning dramatically. They're definitely going to be developing these large vacant lots first and coming in and changing zoning on these acreage blocks. All right, so think of that type of dynamic first. And then as you go north, know that you've got the really strong drivers that are from the Brisbane pool, where you've got that commute times to Brisbane and then the key arteries into Gold Coast. So, we've always liked the Narangs of the world. We've always liked sort of the inland areas here where you've got supply controlled, coming up in here to Ashmores of the world, Pacific Pines. You can't define this any better in terms of what we would look for, and even some of the suburbs surrounding Pacific Pines. And even parts of Oxenford now, they're well enough built out where they're now building further inland that they now are being pushed up. You've got your Bunnings, you've got all your Woolworths and things here, even Helensvale. And now a lot of these areas are now all built out. You can still see some activity here through Cooma and Upper Coomas, etc. But these pockets, you have the central hub here. Sorry, I don't know what's going on here. Central hub here, and then working backwards from that, you have a 3-5 kilometre radius where things start dissipating, and then you have the supply coming in. So as long as you're in nice and tight to these key hubs, one hub here, we've got another hub down here with the Westfields in Helensvale, and you've got a 3 kilometre radius from that. You've got another hub down here in Nerang, and keep rolling down the M1, finding these hubs, knowing this one's probably got a lot of supply coming into it as well. Coming down here into the next one at Robina, and this is a really nice built-out hub as well. Know that we also have the ocean over here, which is another driver of utility. So that's how I'm really making my lay of the land. Let's go into suburb by suburb. So I have taken a little bit of a shortcut here. I have put all the suburbs with their rankings here on the one screen, so we didn't have to scroll. Anything in green is actually in the prime buying window, so obviously things have really aligned for us nicely over the last 12 months. We definitely have some $1 million, $2 million suburbs that we probably, the yields are lower, not really investment grade. Sometimes we might be slightly off the mark in those areas as well, because the purchase prices, what is turning over from a buy side might be the mansions, but what is turning over from a rental side is a unit, or vice versa. So sometimes the rents can be artificially inflated or deflated, or the rental yield, sorry. So sometimes when there's very limited rents turning over, you can have that really sort of flip-flopping back and forth with yields, and that's due to sample not being reliable. So, let's come down here into some of those suburbs that we did see just then. The Helensvales, all right, coming down, and I'm just Oxenford. Even, Coomera we have to stay away from. Merrimack we want to stay away from. Pacific Pines, these are all ticking a lot of boxes through here, guys. All right, coming down here, Nerang, that's sort of standing out. Look, I'm going to probably pick Nerang. There are still some suburbs that are going backwards. I'm going to pick Nerang as one of the areas that we are going to focus in on a street level, because it is a great case study, guys. The first thing that I look at is owner-occupier percentages. So overall, across the suburb, we have obviously a train line going through this, a main commuter hub, but we have some streets within this location that have 4 tenants for every 1 owner-occupier. Have a think about what that street's going to look like. Is it going to be an area that you think is going to have strong capital growth over the next 3 to 5 years? And then by contrast, you have an owner-occupier heartland where you have the opposite. 4 owner-occupiers for every 1, even 9 owner-occupiers for every 1 tenant through this very long tenure time owner-occupier enclaves. So you have really a very strong, yin and yang, I guess, in this suburb. And if you get this wrong, guess what? You're not going to have the greatest capital growth, and things are going to be really pulled backwards for quite a time. Now, there is a strong correlation between units and renters and houses and owner-occupiers. All right, so we see a very similar colour chart here. between the occupancy type and the property type. So know that we want to buy a house in an owner-occupier enclave. Sold prices, it's quite stable and flat across the suburb. We have a couple of other pockets here that are standing out, but really I'm quite surprised by this, where the houses seem to be undervalued compared to units, because we know that they're turning over for similar amounts. So that's a really good sign for me. Rental amounts quite stable across the suburb as well. And that's not to be houses renting for similar prices as units when the values are the same. We want to be focusing on the higher rental yield areas, staying away from the units. So it's this middle market here that I'll probably be focusing on, if not going into these street clusters here. Probably not these three. So I'm marrying all this all the way through. I want owner-occupiers, houses with yields that are above average, rents that are above average, and no or little public housing. Right, so there's some pockets here that have 30% public housing, which is way too high. So stick into that main owner-occupier enclave, which, in the rain, there are some social issues, there are some stigma issues, it is gentrifying, but we need to get the street level right. All right, let me know in the comments, guys, how you found this information. Next steps, as I did mention before, this is all general advice only. Hopefully it's been useful. Hopefully you've been able to take it away and you can apply it. But if you would like to apply this to your unique circumstances directly by a member of my team who's a qualified property investment advisor, book in for a 15-minute discovery call at no cost. There is a link down below to do that. No obligation, no cost. It's just to talk through this and apply it to your circumstances directly.